In today's investment landscape, value-based or sustainable investing is a significant trend, especially among millennials. A shift is pointing toward a future where investment isn't solely about financial returns, but also about ethical impact. Indeed, millennials increasingly prioritize investments that resonate with their values, reshaping how wealth and asset managers approach this demographic change in the investment industry. Recent data serves to illuminate this generational shift. A survey conducted by Morgan Stanley revealed that a staggering 84% of millennials are keen on focusing their investments on environmental, social, and governance (ESG) impacts. This aligns well with another study by Inova in Germany, which found that 86% of millennials are genuinely interested in impact investing. In contrast, a significantly smaller proportion of non-millennial investors prioritize ESG in their investment decisions. For millennials, values-based investing isn't just a footnote, it ranks their third most significant priority among 9 identified investment considerations. But why are millennials so drawn to value-based investing? The answer lies in their desire to exert greater control over their financial future and effect positive societal change. According to the same Morgan Stanley study, millennials are almost twice as likely as non-millennial investors to use their investments to create positive environmental and social impacts. They are not content with earning profits, they aim to be part of a more significant, meaningful change. Additionally, millennials exhibit distinctive behaviors when it comes to their investment choices. They are more prone to favoring sustainable brands and are willing to exit investment positions if they find a firm's activity objectionable. A noteworthy 17% indicated that high-quality ESG practices are crucial when investing in companies compared to just 9% among older generations. Wealth and asset managers, therefore, find themselves at a juncture where adaptation is not an option but a necessity. To serve the burgeoning market, worth over $4 trillion, they must quickly shift focus towards sustainable investments. The sustainable investing market has already shown remarkable growth, marked by a compound annual growth rate of 107.4% and an increase in assets under management (AUM) from $1.0 trillion in 2012 to $4.3 trillion in 2014, according to the Forum for Sustainable and Responsible Investment. This shift is not solely attributable to millennial preferences, but is amplified by macroeconomic considerations. As the world population is set to increase by an estimated 2 billion people by 2050, it will be imperative to address escalating global demands for food, water, and energy through sustainable methods and innovative infrastructure. In conclusion, millennials are not just passive players in the investment landscape, but active agents catalyzing change towards sustainable investing. As they increasingly prioritize value-based investments, they are compelling the industry to adapt and consider ESG a cornerstone rather than an add-on. Understanding this shift is vital for the future success of wealth and asset managers as the millennial generation becomes an increasingly dominant market force.